Risk of material misstatement. This is like the most important topic when it comes to the audit paper, right? Because there's most definitely an audit risk question where you have to identify the risk, explain the risk, explain the impact on the financial statement, and then the auditor's response to that particular risk as well. Okay, folks, so that's basically the idea. Audit engagement letter. Then what we do is we remind, revise, reissue, and get it re-signed from the management. Okay, folks. Thirdly, we have preconditions, and this is a very important topic when it comes to the exam, and it has been tested in multiple sessions as well. Hey everyone, welcome to another session. This is Vishnu Vijay, ACCA, a proud FinTrammer who's been teaching students across the globe and across designations. And in this session, we will be revising through the key topics from the syllabus part B of your audit and assurance paper. So as you can see here, we'll be starting off with accepting audit appointments, and then we'll move on to the audit engagement letter, some aspects about recurring audits, as well as quality management related aspects. And of course, we will also covering the materiality and related topics as well. Okay, folks. So let's get started, shall we? So first of all, how exactly do we get audit engagement as an audit firm? We basically have three means primarily, right? First of all, it's a common method, which is the direct client request. Okay, folks. So commonly, certain clients will reach out to the audit firm for conducting the audit. Okay, folks. So that's basically the first approach. And then there are the two most common approaches, which is advertising as well as tendering as well. So advertising is basically when the audit firm advertises themselves through professional means like business journals, like professional business magazines and all those things. Okay, folks. So that's basically the idea. And then there is tendering as well. And the idea behind tendering is that the client announces that they need an auditor, right? And the audit firms will send a tendering document to that particular client, and the client would choose the most appropriate audit firms for them. Okay, folks, so that's basically the idea, isn't it? So, the contents of the when it comes to tendering, the contents of the tendering document are mentioned over here. We have the overview of the audit firm, and then the level of expertise that each of the firms have, right? And then we have the list of companies audited by the firm, similar to the audit client, right? The resources that they have, proposed audit methodology, skill qualification, proposed fee, etc. Okay, folks. So these are all the content of the tendering document. Now, secondly, when we talk about advertising, there are a few regulations which we have to follow as well. For example, we should not say that hey, we're the best, or we're the number one, or things like that. Okay, folks, or triggering statements like that should not be mentioned, right? You have to follow certain local regulations when it comes to advertising as well. So all those things needs to be considered. Okay, folks. So that's basically how an audit firm gets the job, right? Now, secondly, before accepting the nomination, right? Before I accept the nomination to audit that particular client, what all things should I do? I should conduct a client screening process, right? So as part of my client screening process, like there's a mnemonic that you can remember here: if 3P, 3R, and then 2M. Okay, folks. So what does if 3P, 3R, and 2M mean exactly? So I stands for independence and objectivity, and then F stands for fees, and the 3P stands for professional competence, professional clearance, and preconditions. R is for reputation, risk, and resources. And M is for management integrity and money laundering as well. So I'll quickly go through what each of these things are. Independence and objectivity, we know it's all about ethics, right? Are we complying with ethics while auditing the client, right? Is there any ethical threats, etc.? And then secondly, the audit fee. Is it sufficient to do the actual audit work, right? That needs to be verified. And then the three P's. The first P stands for professional competence. Do the auditors have the appropriate skill and knowledge to conduct that particular audit is something that we need to consider, right? And then professional clearance, right? Professional clearance is basically a process where you contact the previous auditors of that particular client, right? And obtain certain data and records from them, and obtain and of course, we contact these previous auditors with the permission of the client as well. Okay, folks. So after contacting the previous auditors with the permission of the client, we ask them as to whether there is any reason as to why we should not accept this particular engagement. Okay, folks. That's what professional clearance means. Now, thirdly, we have preconditions, and this is a very important topic when it comes to the exam, and it has been tested in multiple sessions as well. Okay, folks. So, what are the preconditions of an audit? First of all, we verify as to whether the financial statement has been prepared using an acceptable financial reporting framework, right? And then, secondly, we obtain a written acknowledgement from our management regarding three things. Okay, folks. So what's the first thing? Like, is the financial statements prepared in accordance with the applicable financial reporting framework? And it is their responsibility to do so, right? It is the management's responsibility to prepare this in this way, right? And secondly, it is the management's responsibility to ensure that internal controls are operating effectively. And it is the management's responsibility to provide the auditors with relevant information in relation to the audit as well. Okay, folks. So these are the preconditions of an audit. So just keep that in mind as well. And then after that, we have reputation as well, right? So when it comes to reputation, like is it a reputable client, right? That's what we're verifying. And then the related risks, like is it a high risk client or a low risk client, right? So all those things needs to be looked into. Do we have the sufficient amount of resources, like the human resources, the technological resources, like the intellectual resources, etc., in order to conduct the audit? And then the management integrity. Is there any history of fraud or something like that in the client, right? All those things. And then, money laundering as well. Okay, folks. So is there any suspicion or possibility of money laundering happening in that particular, company as well, right? So all of these things are looked into before I accept the audit engagement. Now, secondly, after accepting nomination, once I accept the nomination, what all things do I have to do, right? So that's basically what we will be looking as of now. So after accepting nomination, I'll obtain a copy of the resolution passed at the general meeting, right? Because the shareholders will be appointing us on a general meeting, right? So we have to obtain the resolution, copy of the resolution passed, right? And then confirm the resignation or removal of the outgoing auditor as well, so that there's no conflict or something like that happening down the line. And then we transfer all the books and papers from the previous auditors to us, right? And then we set up and submit a letter of engagement, or we call it the audit engagement letter as well, to the directors of that organization as well. Okay, folks. And what is an audit engagement letter? And that's exactly what we will be looking into next, right? So this is a document, or this is basically the contract between the client and the audit firm with all the terms and conditions in relation to the audit. Okay, folks, so that's basically the idea, so that there's no misunderstanding between any parties. Okay, folks, so that's basically the idea. So it avoids misunderstanding between auditors and management and confirmation of the auditors' terms and conditions. Simple as that. And then what is the form and content? Well, we have the objective and scope of the audit, responsibilities of the auditor and the management will be mentioned, applicable financial reporting framework will be mentioned, the frame and content of the audit report, and, the standards, the limitations of the audit, any expectations of written representation, the basis of calculating the fee, all these things will be mentioned within the audit engagement letter itself. Okay, folks, and it can be used as tangible evidence in court regarding the conditions that has been agreed by both parties, that is the client as well as the audit firm, to put it simply. Okay, folks, this is what the audit engagement letter is. Now, moving on to the next one, recurring audits. Okay, folks, so what are recurring audits? Basically, it's basically when you conduct the audit for the same client for multiple years. Okay, folks, so that's basically the idea. Now, if that's the case, then things can be more efficient, right? For example, I can use certain files for multiple years, or I can conduct, or I can, be more efficient when conducting the audit the next year, or in the second year as compared to the first year, right? So that's basically the idea. Okay. So when it comes to recurring audits, a few factors we have to consider here is that, as part of planning and accepting the engagement, is that we have to look for any significant changes in various aspects that are mentioned over here. Okay, folks, such as the financial reporting framework, legal requirement or regulatory requirement, right? The strategic level management, the nature and size and conditions or reputation of the client, the responsibilities of the auditors and the management, implementation or major changes in the system like the IT systems, etc., industry and business environment, as well as client audit client relationship misunderstandings as well. So if there's any change or any new changes that needs to be implemented within that particular audit engagement letter, then what we do is we remind, revise, reissue, and get it re-signed from the management. Okay, folks, so we remind the management that, hey, these are the responsibilities. If there is any change, then we revise the audit engagement letter, we reissue the audit engagement letter, and get it re-signed from the client's management as well. Okay, folks, so that's basically what we do in recurring audits. And now moving on to another core topic, which is quality management, right? So when it comes to quality management, we have three standards that we usually look at, right? So we have ISA 220, which is basically quality management at an individual level, ISQM 1, which is basically quality management for audit firms, and then ISQM 2, which is in relation to engagement quality review as well. Okay, folks, so EQR, right? So what is an EQR exactly, or who is an EQR exactly? So guys, when it comes to engagement quality review, the idea is simple. The audit team, who does the audit team consist of? There would be audit staffs, audit senior, audit manager, and then ultimately the audit partner as well, right? So this particular team, so we have the staff's work is reviewed by the senior, senior's work is reviewed by the manager, manager's work is reviewed by the audit partner as well, right? But how can we be sure that even the work that the partner is conducting is appropriate? That is when we have when we conduct an EQR. Okay, folks, an engagement quality reviewer and his team, what he does is he reviews through, or he goes through all the all the key documents and the key work papers that the audit team has worked on, right, and ensures that everything has been done appropriately, and the audit team has collected sufficient appropriate evidence to back their conclusions and opinion on that particular audit. Okay, folks, this is what the job of an EQR is. And an EQR should be independent from the team. And of course, they'll be at partner level itself. Okay, folks, so just keep that in mind. What else? So when we talk about quality management, there are quite a few elements here, right? So I'll just quickly go through it one by one. First of all, we have the leadership responsibilities, right? So when it comes to quality management, or when it comes to an audit team, who's the leader? Exactly, who leads the audit team? Basically, the audit partner itself, right? So the partner has the sole responsibilities to ensure that that audit team members have the sufficient amount of knowledge and skills to conduct the audit. They're complying with all the relevant standards, relevant ethical requirements, etc. Okay, folks, so that's basically what leadership responsibilities mean. And then ethical requirements, again, is the team complying with ethics? Is there any ethical threats? And if there is any ethical threats, have we implemented sufficient safeguards against them? And then acceptance and continuous, basically the client screening process needs to be followed properly. That's basically the idea. And then engagement resources, right? So when it comes to engagement resources, what are we referring to? We're not only referring to just the human resource, which is the audit team itself, right? But along with the human resource, we also have technological resources like audit softwares, tools, and other analysis related tools and stuff like that, automated tools and stuff like that, right? So those kinds of things. And then intellectual resources like these audit methodologies and stuff like that. Okay, folks. So all of these resources, like, do we have all of these resources to conduct the audit? That is basically what is coming under engagement resources. And then we have engagement performance, which is all about direction, review, and then supervision of the audit work. Okay, folks. So that's basically the idea. Is that being conducted appropriately? That's basically what we look at when it comes to engagement performance. Monitoring and remediation, again, so whenever an issue is faced by the audit team which they cannot really resolve, what they can do is they can consult maybe with an expert or an external consulting firm or an internal consulting team as well, right, to resolve that particular issue, right? So monitoring and remediation is the idea that whenever a particular issue is identified, are we remediating that particular issue appropriately? And on an annual basis at the very least, we or throughout the course of the audit, like if there is any sort of issue that need consultation, are we consulting it appropriately or not, right, and getting remediated accordingly? Okay, folks, that's what we're verifying when it comes to monitoring and remediation. And one thing to keep in mind here is that if we are, let's say, consulting with an external firm or even another consulting team for that matter, or anyone outside the consulting team, outside the audit team, right, what we have to ensure is that we have to ensure that all these things are documented appropriately as well. Who are we consulting with? What have we consulted them with, right? And what is the solution that they're providing, right? All of these things should be documented properly. And what else? Overall responsibility of the audit. Who has that? The audit partner has that. And of course, everyone in the audit team is, of course, by default accountable, but still the ultimate responsibility lies with the audit partner. And finally, documentation. Okay, folks, so we will talk about documentation down the line as well. I guess no, it's not the next topic, but yeah. So when it comes to an audit, we document everything, right? So if it's not documented, it's not done. That's basically the idea, right? So there are many types of documentations as well. There are permanent audit files. There's work papers. There are certain forms, templates, and stuff like that as well, right? So all of these things, right? All of these things should be documented and signed off by the appropriate individuals, right? There should be at a minimum of two sign-offs, right? The one who prepares it needs to sign off on it, right? And then the one who reviews on that particular work paper as well. Okay, folks. So these two sign-offs should be there, and all those things. Okay, folks. All those documentation related aspects. That's basically what comes under documentation. So these are all the elements of quality management. Now, moving on to the next one. ISA 240, fraud and error, right? So we know what is fraud. Fraud is something that happens intentionally, right? Right. Fraud is intentional, whereas error is unintentional misstatements, right? And there's also a term called irregularity. It's basically when you point out an error, right? but the management is not making any change, so there might be something fishy with it. Okay, folks, so that's basically the idea. And then, who has the primary responsibility to detect, prevent, and correct these fraud and error activities in an organization? Is it the auditors? No, it is the management, right? It is the management's responsibility to prevent, detect, and correct errors or misstatements caused due to fraud and error. Okay, folks, so remember that particular point. So, what is the auditor's responsibility exactly? The auditor's responsibility would be to provide a reasonable assurance that the financial statements is not materially misstated due to fraud and error. Okay, folks, so if a fraud and error has an impact on the financial statements, then the auditor will have to take action against it. Okay, folks, otherwise the auditor did not have any responsibility to detect a fraud and error. So remember that particular aspect as well. Now, when it comes to reporting responsibilities, as in, let's say that I have, as an auditor, I have identified a particular issue caused due to fraud, right? Whom should I report it to? Well, of course, I'll first of all go to, if the company has an audit committee, then I'll go to the audit committee first, right? Or the management, right? Or the appropriate level of management, right? If they're not taking any action, then I go to those charged with governance, right? And if that's not working, then I'll go to the regulatory or enforcement authorities, right? After seeking legal advice. Why? Because enforcement and legal authority is external to the audit team, right? And the client as well, right? So it's another third party, right? So therefore, by communicating with them, I'm breaching confidentiality agreements. Therefore, I have to ensure that, I'm seeking legal advice before communicating things to the regulatory or enforcement authority. Okay, folks. So that's basically the idea. And of course, finally, we also report to the shareholders as well, but through our opinion. Okay, folks, through our auditor's report. So that's basically the idea. Okay, folks, so that's basically the responsibilities in relation to fraud and error as per ISA 240. Now, moving on to ISA 250, laws and regulations, right? So when it comes to laws and regulations, what's the idea? Again, who has the primary responsibility to ensure NOCLAR? NOCLAR is non-compliance with, laws and regulations. Okay, folks. So, who has the ultimate responsibility to identify non-compliance with laws and regulations? The management. Okay, folks. And what is the auditor's responsibility? We have to provide a reasonable assurance that the financial statements is not materially misstated due to no CLAR. Okay, folks. So that's basically the idea. And again, reporting responsibilities are kind of the same as fraud and error itself. We first of all go to the audit committee or the appropriate level of management, right? And then those charged with governance, the CEO, CFOs, and directors, right? And ultimately, a regulatory authority or regulatory or enforcement authority after seeking legal advice. Okay, folks. So that's basically the idea. So fairly, an easy thing, as in, I guess ISA 240 and 250 are kind of similar, right? Conceptually, right? It's just the nature of the misstatement. Okay, folks. So that's basically the only thing that's different here. Now, moving on to the next part, ISA 260, right? So when it comes to ISA 260, what's the story? Communication with those charged with governance, right? So over here, what are we trying to do? Responsibilities of the auditor needs to be communicated to those charged with governance, as in, we conduct a planning meeting with the key executives or those charged with governance, and then discuss relevant matters in relation to the audit before the at planning phase itself, so that the audit can be conducted in a smooth manner without any disruptions. Okay, folks, that's basically the idea. We obtain relevant information about the client from those charged with governance, right? And then report matters on a timely basis. If I have identified issues, if there's delays caused by management, we communicate those things timely to the management as well, right? And we build a good working relationship with them. And then there would be efficient information gathering as well by communicating things to those charged with governance, and we help those charged with governance oversee the financial reporting process as well, right? So that's basically some principles that you have to learn under this particular standard as well. Now, moving on to the next one, ISA 300, we have planning, right? So, what is planning? The objective of planning is to effectively and efficiently conduct the audit, right? And the planning process involves two aspects. We have preliminary engagement activities as well as planning activities as well. Preliminary engagement activities is something that we've already covered, right? In the client screening process and acceptance and continuance, etc., right? And then we have planning activities. Okay, folks. So, under planning activities, what do? We do two things, right? We create an audit strategy as well as an audit plan. Okay, folks, an audit strategy is a quick overview of the scope and limits of that particular audit or the overall approach, I would say. And when it comes to audit plan, it's an in-detail budget regarding the resources, regarding the procedures that we do and everything. Okay, folks, so that's basically the idea here. And of course, risk assessment is also a process which we do as part of our planning as well. But before I Uh, that's basically covered in depth in the upcoming topics. Okay, folks. So yeah, what else? And yeah, that's basically it. So in audit strategy, we cover the scope, timing, and direction. Now, moving on. Interim and final audit is another topic which we learned, right? So what's the idea here? Either we can conduct a final audit only, or we can conduct a interim plus final audit as well. So what does interim plus final audit mean? Basically, we're doing a part of the procedure during the financial year itself, so that the workload at the year end is reduced. Okay, folks. So that's basically the idea. And this is primarily used. We primarily do this interim plus final audit approach for huge clients or high risk clients, right? Or public engagements, etc. Okay, folks. So that's basically the idea. So just remember that particular aspect as well. But the primary objective of doing this is so that we can reduce the workload at the year end. Okay, folks. So that's basically it. Now, we also learned about ISA 230 audit documentation, right? So the idea here is that we, as I mentioned earlier, we document everything. And I mean everything, right? So there are a few terminologies which we learned here as well, such as permanent current audit file, right? So what is a permanent audit file? Basically, information that is of continuing importance. Let's say that I'm conducting the audit on the client for 3 years. Then this particular permanent audit files would be relevant for all of these 3 years. That's basically the idea. And current audit files is only relevant to that particular 1 year itself. Okay, folks. So that's basically the difference. And then we basically document everything. So form and conduct includes the size and complexity of the entity, nature of audit procedures, identified risk, significance of audit evidence, and then the nature and extent of exceptions as well, right? And of course, as we all know, uh, by documenting everything, ultimately we are ensuring that we have obtained sufficient and appropriate audit evidence. Okay, folks, simple as that. Now, moving on to the next one, we have risk of material misstatement. This is like the most important topic when it comes to the audit paper, right? Because there's most definitely an audit risk question where you have to identify the risk, explain the risk, right? Explain the impact on the financial statement, and then point out or provide a recommendation, or in other words, the auditor's response to that particular risk as well. Okay, folks, that's basically the idea. Now, let's quickly go through it. We know what an audit risk is. It's basically the risk that the auditor provides an incorrect opinion, right? And what is the equation here? Basically, inherent risk times control risk times detection risk, right? Inherent risk is basically the risk that the that is inherent in due to the nature of that particular client, right? That's basically the idea. And then control risk is basically the risk that the financial statements may be misstated due to the controls not operating effectively. And then detection risk is the risk that the auditor may not detect the error, right? There are two types of detection risk. There's sampling risk as well as sampling risk as well as non-sampling risk. So when it comes to sampling risk, what's the idea? Sampling risk is the risk that the samples that I've made is not representative of the population. That's basically the idea. And non-sampling risk is all the other risks. For example, if the audit team members are not trained properly, then they may not be able to deliver quality, right? So that's basically the idea. Okay. Now, moving on to the next part, we have ISA 320 materiality as well. Again, a really important topic. And what is materiality? It's basically a threshold that we set to determine what's important and what's not, right? Simple as that. And when it comes to materiality, by definition, or the key principle here is that we determine the threshold based on what can influence the economic decision of users. Okay, folks. So if it's let's say a high value amount, then most definitely that particular amount can influence the economic decision made by the users of financial statements, right? So that's basically the overall idea here. And omissions of misstatement influencing economic decisions, and then we determine materiality levels and using a qualitative as well as quantitative assessments, right? And then there's also a concept known as performance materiality as well. So when it comes to performance materiality, what's the idea here? We're setting a materiality level for the financial statements as a whole, so that those immaterial misstatements do not group together to become a material item. Okay, folks. So that's basically the idea. That's what performance materiality is all about. Now, moving on to ISA 315, right? Understanding the entity and its environment, right? That's like the first step where that we do in audit, right? So, why is it important exactly? Because it helps us to identify and assess the misstatement related risks when it comes to the client, right? And it can help us to design the procedures, audit procedures in a bit more effective manner as well. It basically reduces the detection risk. Okay, folks. So that's basically the idea. And there are many ways in which we can gather more information about the entity and its environment related to risk assessment, right? So We can conduct analytical procedures on the total figures, right? We can conduct inquiries, inspections, and observations. We can have a look at the prior knowledge if we have that, client acceptance or continuance procedures as well. Okay, folks, so all these things can be looked into. And then moving on to the next part, we have ISA 520 analytical procedures. What are analytical procedures exactly? Before understanding analytical procedures, we have to understand about substantive procedures as well. Two types of substantive procedures, analytical procedures as well as test of details, right? Test of details, so we know the basic accounting, right? We record transactions through journals and then classify it into ledgers and then ultimately trial balance and then financial statements, right? That's basically how the process works. Now, the idea about, test of detail is that we're testing transaction or we're testing we're conducting procedures at transaction level. Okay, folks, we're testing the journal entries, right, or the ledgers that are classified and stuff like that. Okay, folks, so that's basically the idea. But when it comes to analytical procedures, we're looking into the total figures in the financial statements. So I compare, let's say, total figures in the financial statement, current year information with prior information, or financial information with non-financial information, etc., to identify plausible relationships between them. Okay, folks, so that's basically the idea behind an analytical procedures. And then there are different types of analytical procedures that we can do. We can conduct ratio analysis, trend analysis, reasonable tests, etc. And then, when do we conduct analytical procedures? We conduct it during the planning phase, during the audit, during the course of the audit, wherever we feel necessary, and then finally, at the review phase or at the reporting phase, just to ensure that the overall conclusion that we have reached is consistent, with the findings that we had. Okay, folks. So that's basically the idea. Okay, so that's what analytical procedures are. Of course, we will learn a bit more deeper about this down the line as well. And then what else? ISA 330 responses to assess risk, right? So how do we respond to certain risks that we have identified? Two methods, right? Either we conduct testive controls or we conduct substantive procedures, right? Testive controls are basically to ensure that the internal controls of the organizations are operating effectively without any issues. And then substantive procedures are basically, as I mentioned earlier, it's basically conducting analytical procedures as well as test of detail. So basically conducting testing in the total figures in the financial statements as well as certain things at transaction level as well. Okay, so that's basically the idea. So how do we respond to risk? Basically through audit procedures like these two. Now, what else? How do we evaluate misstatement? Right? So when it comes to evaluations of misstatement, what we do is we accumulate all the identified misstatements and ignore the ones that are clearly trivial. Like let's say there's a 0.5 difference, a dollar difference or something like that. We just simply ignore it. Okay, folks. So that's basically the idea. And then assess management's refusal to correct the misstatement. Let's say that if we ask the management that, hey, we've identified this amount of misstatements, can you please correct it? Right. So they might correct some of it, but they'll say that at times some management will say that, hey, we're not going to correct this. Right. So if the management is refusing, that kind of increases the risk. Right. So if the risk is increased, what happens to the materiality? We may plan to revise materiality and test more items. Right. Because it's a red flag. That's basically why. Okay, folks. So we lower materiality. Right, and then test some more items, right? And if still we identify some misstatement, and if the management is not really ready to make any corrections as such, then what we do is we request a written representation on the immateriality belief. Okay, folks, if the manager believes that whatever they've done or the misstatements that we pointed out is immaterial, then we'll obtain a written representation from them. Okay, folks. And of course, there are further procedures as well. For example, if the management is refusing, after this, what we do is we go to those charged with governance as well. Okay, folks, that's the next step. And if they are also refusing, then, I have no option but to modify my auditor's report, right? So that's basically the idea. This is how I evaluate the misstatement. It may seem like a few, set of steps, but it's really important. There can be MCQs as well as there can be, case study questions will be tested out of this. So please be mindful of this. Okay, folks, mindful of this particular process. And then, of course, there are types of misstatements as well: factual, judgmental, as well as projected. What does factual mean? There's no doubt that it is a misstatement, right? That's basically the idea. And judgmental means that it's primarily in relation to estimates or calculated figures by the management, right? Because according to their judgment, it might be right, and according to the auditor's point of estimate, it may not be right. So that's that kind of issues. And finally, we have projected misstatement. What's the idea here? It's primarily in relation to sampling. Let's say that there's a population of 10 no population of 100 items, right? And I have tested 10 of those. I have tested 10 samples out of this 100 item population. Okay, folks. And let's say that I've identified two risks within the samples, right? So how much misstatements would there be had I tested 100 instead of 10? Okay, folks. So when I tested 10, I identified 2 misstatements. So had I tested, I'm not testing it, of course, I don't have the time or resource to do that. So had I tested these 100 items, how many misstatements would there be? This is what I'm calculating as part of projecting misstatement, as to what projected misstatement means. Okay, folks. So that's basically the idea. So yeah. So estimated total misstatement from a population. That's basically the from a sample. Okay, folks. So that's basically the idea. Alright, so that's basically all about this particular standard as well, and this particular session as well. I hope you enjoyed it, and I will see you later in another session where we will, learn more about some more key topics from the paper. Okay, folks. So till then, this is Vishnu Vijay signing off.